Hello, this is Jeff Bish, president of MarketGauge.com, with another video intended to make your trading more profitable by understanding how to take advantage of ETFs. Now, as you can see in my screen here, you're looking at the S&P 500 ETF, the SPY, and it's breaking out to new highs. By all means, we should be paying attention to this. However, there are other ETFs from across the globe that deserve just as much attention. So in this video, I'm going to show you an ETF that's set up beautifully. But before I do that, just make sure if you're watching this on YouTube to subscribe to our channel. And also I want to make sure that you know that down here in the lower right, you can change your settings to HD and everything will be much clearer. I think you'll like it. Okay, so with that, let's get started. The S&Ps are breaking out. We know that. But what you're probably not seeing is what's going on in emerging markets. So why would we focus on emerging markets with the S&Ps breaking out to new highs? Well, only to diversify. I'm not suggesting emerging markets are necessarily a better opportunity than the S&Ps, although they might be. But they certainly are a way to be diversified. And they've got a pattern that is well worth knowing, even if you don't execute it here on the EEMs. All right, so the EEMs, first of all, represent emerging markets. Basically, it's an ETF that contains the country indexes of Brazil, Chile, China, Colombia, Czech Republic, Egypt, Greece, Hungary, India, Indonesia, Korea, Malaysia, Mexico, Peru, Philippines, Poland, Russia, South Africa, Taiwan, Thailand, and Turkey. All right, so it's a basket of emerging markets. Now, the thing that makes it really interesting right now is the price action. And the price action that I'm focused on is you've got this big thrust that's taken you from what looks like a pretty substantial base. The magenta line here is the 50. The gray line is the 200-day moving average. So that's crossing. I'm not focused on the fact that you've got what's referred to as the golden cross here and that makes this the ideal time to get in, although that does represent a significant change in phase, as we call it, and that is definitely an underlying reason to be focused on this. But the other pattern that is just as compelling, and I would argue even more timely, is the way that it broke out above the 200. It's now retraced right back to this level of support as defined by the price action. And one of the mechanisms that I like to use on retracements to time my way back into a retracement is the green line. Now the green line is the 10-day moving average. So when a market has a really strong move up and then a correction to a good level, oftentimes that correction will bring it back under the 10-day moving average. When it comes back over the 10-day moving average, then you've got a tight swing trade with a risk under the low of the correction. Now in this case, that low also represents an area that should be good support. That low may soon represent an area that's also the 50. So whether the opportunity is today or in the coming week, it's hard to really tell. It depends on how aggressive you'll be. My thought is to start building a position right in here with a stop under here, maybe even a stop under the 50. Now, I'm going to take it one step further, and that is one of the things you want to consider with the EEM is what's going on with the currencies. So if we just take a quick look at the dollar index, I want to show you that there is somewhat of a relationship in terms of the direction of the dollar index and the direction of emerging markets. So essentially, if you have a strong move up in the dollar index, it's going to have a negative effect on emerging markets. And while the correlation is not necessarily day to day and the correlation will come and go, it's strong enough that you should at least be aware of it. And especially based on where the markets are sitting, this could play a significant factor. So just to kind of show you what I mean, in this, if we just take a look in general, here we've got a dollar that's kind of floundering but stable, and in that time frame, you can see, if I just draw the line down here, you can see that the EEM, or even draw it down here, you can see that the emerging markets were doing pretty well. When it became apparent, however, if we just follow this down, when it became apparent that the dollar was really beginning to move off of this base, you can see the EEM got weak. You can even see the signs of it coming on this move up in the dollar, causing some weakness here. So you can see it was almost like the markets are saying, uh-oh, the dollar's rallying, EEM gets weak, dollar stabilizes, EEM wants to go higher, dollar really starts to take off, EEM gets hurt. Okay, now if we continue that thread, you can see the dollar continues on its tear, almost a historic tear, right? And that causes trouble for EEM. Like I said, it's not day to day, but this is not a great environment to be looking at EEM. So if you think that the dollar is going to rocket back up to new highs, then this probably isn't going to be a great environment for EEM. If, however, the dollar's sell-off continues, then that should put a tailwind on the EEM. If the dollar, which has had an enormous move, just settles in here, you could still have a situation where EEM could rally, especially in the environment of U.S. equities leading the charge in terms of global equities rallying. Right? In general, global equities are looking pretty good, and this offers a way to get into those emerging markets at what I described earlier as a pretty low risk entry point with stops below this swing low. Looking, and if it pulls back into this level, look for the retracement to the 50. Look for the dollar to either flatten out or continue its decline. That'll give you a headwind. If the dollar a tailwind. If the dollar rallies strongly, that's going to give you a headwind. All right. If the S&P breaks out and stalls, which is where I started with the S&P chart, this market is not breaking out to new highs. So this has plenty of room, as you can see, plenty of room to rally, and ideally, plenty of room to get up to the 46 level, and if it gets up to the 46, I want to be positioned before we get to 46 for that kind of a breakout and a move higher. So I hope that helps. Hope it expands your horizons, and make sure that you check out marketgauge.com/tutorials for more videos like this, and even ways to scan the markets to find opportunities like this.